Due to the nature of fine wine, it's slowly drunk over time, and therefore there's less supply in the market. Often it can get better over time as well. Therefore, these two drivers of supply mean that over time the price increases.
Wine is heavily uncorrelated to traditional assets. In traditional market downswings, you're less likely to have the same effects in the fine wine business.
We struggled to find a vehicle that could encompass fine wine as an alternative asset. And it was great when we got onto Gen 2 and were able to set up an AMC.
This is the Assetizer podcast.
Hi, everybody, and welcome. My name is Tom Lyons, and this is the Assetizer podcast. And today we're going to be talking about fine wine, not necessarily drinking it, but rather investing in it. Although, if I understand my two guests correctly, sometimes you can do both. And without much further ado, guys, welcome to the show. I think we should just jump right in. Why don't you introduce yourselves and talk a little bit about the product we're here to talk about? And then I want to get into the wine business after that.
Tom, thank you for having us on your show. We're excited to introduce the concept and talk about fine wine, something that we have been working in for a very long time. This is an exciting opportunity for us to show you.
My name is Johan Malan. I am based in Cape Town, South Africa, and I've been working in the fine wine space for just over a decade. Started initially buying and selling wine for myself, and as you said, drinking a good portion of it as well. Find wine investing a very compelling and interesting asset class and industry to be a part of. So excited to be on your podcast.
Is by the way, just as an aside, is drinking it yourself sort of an investment risk in this business?
Yes.
I think when we started in the industry, there was always two paths. One where drinking excessively ruined your career, or one where drinking the right portion enlightened your career and grew your career. And, hopefully we've gone on the latter and enjoyed many great wines. I think that's an important part of investment into wine, knowing the product, visiting the properties. Johan and I have traveled and visited most of the fine wine properties in the world and tasted and traded all the wine. So we have that deep experience, and that's one of the important parts of this Wine AMC, Tom.
Okay, so why don't we then start there? Why don't you tell us a bit about the product itself? First of all, how you guys got together and what the product is, and then we can go on to the industry.
Hey, thanks, Tom. I've been in the industry for more than 2 decades, selling and trading fine wine. And over this time, we've seen that fine wine has just got more expensive every year. And over that period, certainly we've seen it firsthand how the fine wines have increased in value. If you go back even further to the latter parts of the previous century, the same was happening. The top wines around the world, due to the nature of fine wine, it's slowly drunk over time, and therefore there's less supply in the market. Often it can get better over time as well. Therefore, these two drivers of supply mean that over time the price increases through demand and through scarcity. So we've seen this trading at Wine Cellar for very long. We've had a lot of customers that have taken note and bought over this period, and we manage their cellars on the international market. But lately, we've seen there must be an opportunity for a more formalized investment structure in fine wine. That's what we've been working on, and really excited now that we can offer it to the market, the first securitized fine wine investment product. Not only the long-term growth of fine wine, but also the more shorter-term opportunities of growth in fine wine trading. And the AMC that we've put together is a very lean structure and powerful structure with good regulation that allows us to offer this investment product in a unit trust or in a portfolio which is required of security. Johan works at Wine Cellar, and I'm a director at Wine Cellar, and we worked together for many years. Wine Cellar is a very important part of this product because of the relationships, the connections, the trading history that Wine Cellar has in the international fine wine market.
Maybe just a quick anecdote, Tom, on how Roland and myself met. So I started buying and storing wine for myself. So Wine Cellar offers customers the opportunity to store wine professionally. In South Africa, we don't have the same depth of fine wine culture as you would find in Europe or the UK. Consequently, I started storing some wine with Roland at Wine Cellar and wanted to sell some of it back to market. trade some of the wines. And Roland assisted with that. I had an opportunity to make a change of career at that stage. So I approached Roland and said, look, can't we do something together? And that's how we started working together. At that stage, Roland was offering through Wine Cellar a first of a kind of basket of investment wines to the South African market. And so that's really how the journey began, where we started looking at how can we put something together that's of real value and of real interest to the fine wine market. And specifically at that stage, it was very South African focused. And I'm sure we'll get into the details and the nitty gritty of AMCs later on in the podcast, but went through various avenues looking at what can work. And so it's really been many years that Roland and myself, together with Wine Cellar, have been really investigating to see how we can really put something together that's exciting and workable in the fine wine space in terms of capturing that value.
If I understand correctly, the wine sort of market has kind of been professionalizing fairly recently, as opposed to just collectors and connoisseurs in the past. Maybe you guys can give us a bit of sense of how that's been going, and what's the investment case for fine wine. So putting the drinking part, and the enjoyment part aside.
So the fine wine market is dictated by the supply. As fine wine is released to the market, it moves through to various trade and retail, and therefore starts being consumed. Over time, there's a diminishing supply of these fine wines, and they get rarer and the price increases. What's happened over the last 20 years is technology has allowed there to be more pricing certainty on these secondary market wines. There's more liquidity in the market on secondary wines. And this information and liquidity allows us for the first time to operate a more seamless vehicle that can get in and out of fine wine positions. If one were to try 20 years ago to do this, it would be difficult to know what the market price is of a fine wine, and it would be equally difficult to know how to liquidate that position quickly and cheaply. Today, there are a number of exchanges which allow this seamless transaction to take place. And we have experience with Bordeaux Index, which is one of the largest, if not the largest exchanges or merchants. We've been buying from them for almost 20 years. And we've recently had more experience with LiveX, which is the biggest trading platform and the de facto pricing mechanism in the market. LiveX looks at all the fine wine trades in the market and has an algorithm that works out a market price. And this market price is, of course, very important to understand the valuation of a portfolio of wines. And all the great wines around the world all have a market value. That certainty of price has been brought about by technology, and specifically LiveX, which was started 20 years ago by two stockbrokers that saw exactly the opportunity that we're now taking advantage of 20 years later. But it's taken that long, I guess, for the wine investment to develop.
If I can just jump on the back of that, Tom, I think what makes wine as an asset class interesting, apart from the basic supply and demand elements, the other interesting part of it that I think is a secondary driver of value in this case is that apart from the fact that supply diminishes over time, there's also a greater appreciation for fine wine over time. So you've almost got two drivers of value there. The fact that supply has come down, but also among consumers who appreciate and understand fine wine, there's an understanding that drinking great 2010 Bordeaux is much more appropriate now than it would be to drink 2020 or 2022. And thus the market traditionally is incentivized to drink older vintages. So in that sense, you have that natural driver of growth just because of the qualitative nature of the product as well.
Okay, and what makes a really good investable wine as opposed to just a good wine?
We see the opportunity of trading fine wines very much like the opportunity of trading stocks on a stock exchange. Each stock is viewed as a wine with this particular vintage, and that stock, that asset has a management team, it has brand equity, it has some income and expenses and trends that are all specific to that stock. And there are 1,000 wines in the LiveX 1000, which is the most tradable wines in the market and the de facto pricing index in the market. And we would look at those, and we do look at those on a regular basis as the opportunities for fine wine investment. But remember, each vintage is a new iteration. It's a new stock, essentially. And therefore, there is complexity every vintage. Johan and Wine Cellar have been trading the 2024 vintage currently, and there's lots of excitement and nuances around that. But we get to know not only the producer, the region, the team and the ownership around these properties, which is really important, but also then nuances like the vintage and supply and so on. And so each stock pick becomes quite complex.
Can you tell pretty much right away if its vintage is going to be great or not? Or is it more of a, oh God, I'm trying to say, or are you just not guessing, but are you assuming?
Yes. The quick answer is yes. I've also got experience as a wine producer. My wife is a wine producer, and we've just produced the 2025 vintage, and we know straight away from the weather patterns and from what comes through the cellar quite quickly. One can see that it would be a great, or what kind of harvest it would be, how long it's going to age, because you have a lot of information with the track record of fine wine production. And that's maybe a nice segue into what makes a wine investable. Really brand equity and business strategy, succession strategy is so important in this game, because like a stock on the stock market, these properties need to continue and invest. They need to grow their brand, manage their brand, manage their distribution. And so that long-term track record is number one for Johan and myself. And just to give you an example, we all know the wines from Antinori in Tuscany. But that's 29 generations of Antinoris running that business. I remember visiting once and asking the director, wow, this is a terrific new winery that you've built, but it must have cost a lot of money. And he said, even if it takes 2 generations, it's still not a long time in our history. So these are long-term, often family-owned or very well collateralized businesses that produce these wines. They're able to ride through tough times, which it is at the moment, Tom, and capitalize effectively on these moments. And they're long-term businesses. One can remember Thomas Jefferson's favorite wine was Lafite. That was 300 years ago. And if you had to put a wager on it, I'm sure if Lafite Rothschild will be around in 300 years' time because of the nature of the business.
Another question about the wines is I know that the fine wines are drinkable for quite a long time, but at some time they're not, right? So there's unlike a stock necessarily, there's an end to this. So how is that? How do I handle that as an investor?
So the great thing about that, Tom, is wine is a very scientifically and meticulously produced agricultural product, but there's still very much a subjective, I want to say artisanal reality to fine wine. And from a consumer perspective, let me start that way. The age of how you prefer your wine is really a function of your own preference. You can have some of the world's top critics tasting samples back from the 1860s and 1880s and commenting on how terrific the wines are, where I guess most folks around wouldn't understand those kind of wines because we just don't drink them regularly. That's just the reality. By the same token, when we take an investment view on wine, there is definitely a horizon of when you would decide to not keep too old a stock within let's say a portfolio or a basket for various reasons. But in terms of the lifetime or the lifespan or the shelf life of the product, in wine, it's really up to the consumer. So it's two different views. The consumer, it's really up to how you would prefer to enjoy it. But from an investment perspective, there would be a cap as to how long you would keep wines just due to the risk of older bottles.
So I would be slightly concerned as the investor that at some point I'm going to have trouble selling it.
Yes, we would monitor that on a continuous basis, and certainly not buy stocks or wines for long-term investment if they don't have the features of long-term investment. For instance, we wouldn't buy a Sancerre or a entry-level white Burgundy for a 20-year maturation potential, but we certainly would do for a first growth Bordeaux, because we know if we see a more short-term position on a Pouligny Montrachet, for instance, and we know that we could get some value out of a transaction on a short term, then we would put a position into it. It's about evaluating which stock and for what type of opportunity you're purchasing that wine. There is some commentary in the market that wine investment drives up price. We counter that argument by saying that wineries can, but often can't, due to just the nature of storing wine and keeping high valued assets on your balance sheet. They can't mature the wines effectively to sell to the customer when they're mature. A great Bordeaux needs 20 to 25 years. Champagne can be similar, as can the great wines of Italy and Spain and so on. And so this vehicle, this AMC, is effectively a maturation vehicle in one way, presenting the market with mature wines when they're ready. And we would liquidate a position, and that would go straight into the trade, which would supply restaurants and hotels or retail where people would actually be consuming the product.
Okay. So contrary to my concerns, actually, there would be a quite active market at the right time.
It's very active, and we'll get onto it later as to why this is such a unique position. But liquidity is obviously the number one concern for all investors in fine wine. How do you exit your position and gain the full value? And we have a really strong liquidity case with this AMC to make it far more certain for investors to make sure they're able to exit the positions.
Great. And I want to dive into that, but just before that, just to stay on the market, what kind of returns have we been talking about now? And how is wine correlated or not to other investments?
If you use the LiveX 1000, that broad measure of the fine wine market that Roland referred to earlier, that's run by LiveX, since inception in 2003, it's averaged around 7.5% per annum. In terms of being correlated to other assets or traditional markets, wine is heavily uncorrelated to traditional assets, which we think makes it exciting. In traditional market downswings, you're less likely to have the same effects in the fine wine business and vice versa. At the moment, as Roland pointed out earlier, fine wine has been in quite a strong bear run market since the middle of 2022 for various reasons. COVID overstimulus in the market being one of them. But we just think that just creates a much more attractive entry point into the market to really capitalize on that long-term steady growth. What makes fine wine really exciting or attractive over the long term is its long-term steady growth that delivers you that 7, 8, 9% continually.
Okay, fantastic. Well, so why don't we take a look at the AMC that you guys put together, and you're billing it as the world's first of its kind. So maybe you can tell us why.
Yes. So Tom, fine wine is a complicated industry, and it requires a lot of experience, understanding of the market, understanding of all of these 1,000 different wines. As I said earlier, we've tasted a lot of these wines. We know the properties extremely well. The barriers to entry of a wine investment product are quite high. If you add to that then liquor, you add to the storage, the insurance, you add to the local and international regulations in terms of investment vehicles. We struggle to find a vehicle that could encompass fine wine as an alternative asset. And it was great when we got onto Gen 2 and various other parties and were able to set up an AMC, because it takes regulation essentially from 3 or 4 different areas and makes it as secure as it possibly could. We've got a very strong financial services regulation in South Africa, and we had to get approval with the FSCA regulated for this vehicle, along with all the other securitization that happens in the other parts of the AMC.
Yeah, I think it's as simple as what Roland alluded to there at the end, which made it really attractive for us, is in a South African context, putting something together like this has been very difficult, because wine in itself is an unregulated and considered as a more informal asset class. So what we found the AMC to be very powerful for is offering that securitized or security packaging within which to trade. And as far as we know, in terms of being the first, Roland alluded to both LiveX and Bordeaux Index, and speaking to our friends and partners on that side, they haven't had any AMC accounts or requests as such on their side. And if we just think about their reach, I'm pretty sure within your own world, Tom, we think it's a new and exciting offering for the fine wine market and for the AMC in alternative space. It really speaks to all of those markets.
Yeah, no, it really does. And we're certainly excited here at Gen 2 to be part of this, because it's very much speaks to, that part of the assetization part of our business, right? Bringing new types of assets, making them bankable in fairly simple ways. So if I was a potential investor, and I'm talking to you and doing a bit of due diligence, and I came and asked, what's the setup? How does this work behind the scenes? Who's choosing the wines? Where are they? How do I, how much should I invest? And how's risk being handled, etc. What would you be telling me?
Yeah, let me handle that one. Thanks, Tom. The entity is essentially a company that is based in the Cayman Islands. This entity owns fine wine, which is stored in the UK and in Europe. It's only purchased or traded and stored through the two large entities that we're speaking about, Bordeaux Index and LiveX. It would be almost impossible to not tap into the biggest liquidity pool in the world in a wine investment product. That's why we are very confident to say that it's the first, because without these two big liquidity pools, it would be really difficult. And so the wine is stored within this environment in the UK, which has been traditionally the largest fine wine market in the world. If you go back even 200 years, they've always been fine wine market hub, let's call it. And then the wine is, or the wine as an asset of this company in the Cayman Island is securitized by a bank in Switzerland. And that's essentially the mechanism that you're investing in, a certificate of the ownership of this physical wine that is stored in a bond, which means it hasn't been paid duty, it hasn't paid any tax, it hasn't been released to the market, which is a very key part of wine investment. One cannot invest in secondary market wines if they've exited the formal cellaring industry, let's call it. Once it exits the in-bond storage, it goes to the market and it gets consumed and it moves around, whereas we only invest in 100% provenance wines, which have been in a fine wine storage and in bond their entire life, essentially a pristine stock. The certificate can be purchased from £1,000, but we believe that larger chunks would be more beneficial to anyone's portfolio. And just to add to that, we did a research project with the Stellenbosch University 2 years ago, where they're able to look at LiveX data going back a number of decades. And they proved that having a small portion of your portfolio in fine wine as an asset increased your returns over time, due to the fact that it has uncorrelated lower volatility compared to other investments. So there is a pure investment case into fine wine, and this AMC essentially gives you the exposure to this business case. And furthermore, just to talk about the LiveX 1000, it's an index, a broad index of the most tradable wines. This doesn't mean that's the market, because they're certainly not the most investable wines, which are the most liquid wines. And Johan and myself have over the years identified where we see value and where we don't see value. The most tradable wines often always the most investable.
Okay. Johan, maybe over to you. I know we touched on this already a couple of times, but just to get more into detail or get deeper into how you're making these decisions, how you're picking, you just said, tradable wines. So how does that process look like to me as a potential investor?
So luckily for the investor, maybe just to quickly jump back to the structure that Roland referred to. Roland and myself are part of an advisory or the advisory that actually does the stock picking for the AMC. And within that, Roland referred to a strategy that we've built over the years, and without giving too much away, regionality plays a big role. We briefly touched on it earlier on. You also referred to it at the beginning, Tom. There's a difference between making an investment case for top-end Bordeaux versus a producer in Sancerre, as Roland mentioned earlier on. So regionality would play a big role. Bordeaux, very much still today, is the heart of liquidity of the secondary market. So that would be a big part of the portfolio to ensure you have that liquidity. But of course, there's great value also outside of Bordeaux. We see there's even though there's a correction in the market, there's some fantastic and exciting things happening in Champagne. Areas like Tuscany and the very well-known Super Tuscans, we think have consistently performed exceptionally well. And within our strategy, we also take a very strong view on vintage variation, which we alluded to earlier on. Not all vintages are created equal, to use that expression. And similarly, they're often priced in the same manner as well. It's certainly been the case over the last 15, 20 years that in very strong Burgundy and Bordeaux vintages, the release price to market is often hiked. But that doesn't necessarily translate to being the most investable wines. And often over time, you would find so-called lesser vintages that often over-deliver in terms of the returns. If I think about something like 2008 Bordeaux, it came to market at a very uncertain economical time as well. But over time, the quality of those wines have been reaffirmed. And if you now take a view on when those wines were released, they actually delivered very attractive returns. And we think there's a good case to be made for a portion of the portfolio to be allocated to top South African producers. Over the last 10, 15 years, we've had some of the world's best known critics visiting South Africa annually and writing their reports on the state of the market in South Africa, the quality that's being produced. And there are a number of top in South Africa producers that are now sought after in the fine wine markets of the world. However, if we look at the top merchants or exchanges and Livex in particular, in this case, the value of South African trade in the secondary market is exceptionally low. It's almost negligible. So to that extent, we think that by introducing South African top-end wines that we know have strong demand and have a strong following in the international markets, we think that's a lever we can pull on to create additional value that other portfolios at this stage don't really have exposure to. So we think there's value to be created there. Of course, all of these wines being stored in Bond are also fully insured. So from an investor risk perspective, the wines are all covered and insured to give you that assurance and security.
What are the kind of investors that you guys are marketing to, or who would be right for this product?
Wine is an emotive product, Tom. So even though we want to make a very firm investment case, which we believe have the numbers to back it up, we also still believe in wine as a product being a fantastic product. We think there's a connection to the product, and as a result, we like to connect with people, or we think investors or potential investors who have an affinity for fine wine or just enjoy a great glass of wine and has an appreciation for where it comes from, something like this would be ideal for them. But by the same token, because we think that as an alternative asset, it offers great diversification because of its uncorrelated nature and steady returns, we think any high net worth individual would do well to allocate a small portion of their portfolio into fine wine, and specifically in our AMC, hopefully, as a diversification tool in their broader portfolio.
So if I'm an investor, is there a way for me to actually drink one of these every once in a while, or no?
Not from the fund. We have active reporting on the portfolio, and this is an exciting part. That commentary can be exciting content for the investor. Oh, wow, there's a trend in Piedmont happening. Let's go and explore those wines. I see they've got a Vira in the portfolio. Let's go and drink some Vira Barolo and see what this excitement is about in the market and these returns, where they're coming from. So there is a connection to the product, more so than investing in copper, for instance, where I don't think one would get the same emotive joy having that connection with the product. So that certainly does help. And, if you're sitting at the dinner table and you're drinking a Level Barton, which is in our portfolio, that is, again, a nice connection to and a full circle in the product. And it's been fun. It's been a fun journey for Johan and myself to analyze not only the quality, but also the investment case of all of these different properties. And in that, we've started seeing trends which make a lot of sense, such as new investment into a region. What does that do to the price of that wine? And often it makes a huge impact. You can imagine If there's new capital flowing into a project or into a company, there's an expected return down the line. And if these are serious management teams with good capital, generally they make the right choice if it fits the quality. So we see that new entrants are a very good investment case. We followed a few of them and they have been. So there's a lot more nuance to each property than just buying and holding.
Of course, each country's own legislation would dictate, but there's certainly a market that I think this could be very interesting to would be fund managers themselves, who don't necessarily have the fine wine expertise, but can see the basic investment case within fine wine, and if the returns and the risk, relatively low risk, fits one of their portfolios or funds, we think this could be a great way for them to plug into the fine wine world as a diversification for their own funds or assets. So obviously institutional investors, if their regulations within their jurisdictions allow, is definitely ideal.
Which is an important point, Johan, because it allows the fund manager to retain the AUM and not get that AUM out the system. And if they were to invest in wines in a normal managed portfolio, which is the de facto way to invest in wine, where you literally hold the asset yourself, you're passing away AUM, and you don't quite have the liquidity. So we're really making this really investable, efficient vehicle where literally two individuals are able to manage a large portfolio of wines and not have individual investors with all different requirements interfering essentially with the process. Often there are also incentives to trade and invest in wines which perhaps aren't the most investable. And Johan and I, being completely independent, we invest in what we think are the most investable wines within our strategy and mandate.
You've said we're in a bit of a bear market right now in the wine industry, but what's your forecast maybe over the mid to longer term?
Let me take that one. We were around during the financial crash in 2008, 2009. I experienced the firsthand 1997 as a vintage in Bordeaux being released to too high, and essentially seeing a cycle within the fine wine market where prices start ramping up and overtake demand essentially, and a bubble. So we saw in 2008, 2009, there was effectively a Chinese surge of interest into Bordeaux specifically and into Lafite specifically. The price shot up and it influenced the indexes very dramatically. So there was a bubble that essentially popped around that time. And we've just experienced another one. There was a huge stimulus into the market, and that allowed the supply to be drained essentially, and the prices shot up 20, 30, 40% in many wines. Over the last 2 years, they've come back down essentially where they started because the supply chains have changed. The trade has changed. Restaurants, importers, and agents have all restructured, and there's certainly been a bit more negativity from economic points of view and from a macro backdrop. We've got to a point where the market is oversold and prices have come back almost 10 years in some cases, to a point where they're effectively the lowest comparable price within this 20-year period. And that's exciting for Johan and myself, because we believe in fine wine as a product. We believe in these businesses and their ownership, that they're going to be long-term. Therefore, at some point, one will realize incredibly low value compared to other points in time.
Just to add to that, Tom, I think Roland referred to the Antinori earlier on, and they're not entirely unique or singular in having that long history in the wine industry. And so to that extent, even though there are certainly headwinds in the industry at the moment, we do think it's cyclical, and the long-term outlook with the long tradition that fine wine has, even though from an investment perspective, it's only been the last 2 or 3 decades that people have really formally looked at it. The reality is that fine wine has been produced for hundreds of years with very deep roots, cultural roots. And so we think that within the next 12 to 18 months, Roland referred to Bordeaux en Primeur coming to market at the moment, maybe not hitting all prices that the market would have wanted, but certainly you can see how the Bordelais have lowered their release prices over the last 2 campaigns. We think that's just part of the correction in the market. Over the next 12 to 18 months, we'll see the market turning again.
And there are some shining lights, Tom. I mean, there are developed markets, China, India, or developing markets rather, China, India, Africa have really not come on in terms of fine wine yet. But we know that the taste for fine wine doesn't suddenly drop. And as wealth is created, fine wine becomes part of that culture, and it's very difficult to stop drinking great wine, to be very honest. And so once it's ingrained in these more developing markets, as it's growing in many, we see a bigger opportunity. And then also there is a climate change factor here, because wine is finite. It's not something that you can replicate. There is a very small inflation in fine wine because the areas within France and within the regions which are investable are set within French law. One can't all of a sudden now produce double the amount of champagne, for instance. So there's certainly a constraint on supply, and climate change is making it even more difficult, so that there are regions in the world that are not producing the quality or the quantity that they have in the past because the weather is changing. So we see that a pre-climate change vintage in the market may even gather a premium just because what's being produced in the future might not be the same. So there is quite a long-term view here, and we're excited to take that value forward.
This is really great. So maybe as a last question, you guys are based in South Africa, which, if you don't mind me saying, is not necessarily known as a great wine region, but I'd be curious to understand better what the local market is like and how you guys are addressing it.
Some would say that firsthand we've changed the market in South Africa. 20 years ago, one couldn't buy a secondary market wine. We have now 2 platforms and investment products which supply the market essentially. And through our auction partnership, we now can offer a lot more certain vintage pricing than ever before, and the liquidity is growing at an alarming rate. Being at the tip of Africa, we certainly do have a strong entrepreneurial background, and we're able to produce this product which is relatively light in terms of structure and fees, and can capitalize on the value of fine wine, the long-term returns of fine wine, which I think is unique. And that's why being in South Africa is quite a strong point for us.
Yeah, I can just say that I alluded to when I started here at Wine Cellar. Before I started, I was a customer at Wine Cellar first, and I remember the first products that Roland was actually the architect of putting it to market, putting baskets together for the local market of top-end South African wine. And at that stage, it was very new, and it was something that the market and even some producers were quite critical of. Today, if we look back, it's created a plethora of high-quality stock for the South African secondary market that's currently being traded. And so to that extent, we've done it in a very small and yet very competitive market in South Africa. And I think that with the spirit and the tenacity we can bring to the table, we think there's a really exciting proposition ahead of us to do something really exciting within this AMC.
That sounds fantastic, and I wish you guys all the luck with that. And thanks so much for taking the time to join us. This was a really, really excellent conversation. Thanks, guys.
Thanks so much, Tom.
Thank you, Tom.